Hi everybody, this is Dimitri Pargamonik with MarketChameleon.com. I wanted to demonstrate to you how to read a Vwap graph, and I'm using Apple Computer as an example here. The Vwap is this yellow line over here, which is the volume weighted average price and how it progresses throughout the day. And this is a very important indicator because most large institutions, mutual funds, large hedge funds will use the Vwap as their benchmark for order quality execution. So for example, a mutual fund that needs to buy millions of shares has to split it up throughout the day, and what they will do is VWAP it or peg it to the VWAP, trying to get either below the VWAP price or at the VWAP price by the end of the day, and vice versa if they're trying to sell. So over here, the blue line is how the price fluctuates around the VWAP, and the up and down green lines over here is the one standard deviation move up and one standard deviation move down from the VWAP price, which creates a trading band around the VWAP. So what you expect is about 67% probability that the price will fluctuate within that band. And the idea behind the VWAP and why it's important is because that order types around the VWAP are programmed to either do better than to do better or buy at the VWAP, or do better or sell at the VWAP. So as the price goes higher and higher away from the VWAP price, then those program buy order VWAPs start to slow down, and the sell VWAP orders start to become more aggressive, pushing that price back down towards the VWAP. And then as the price falls below the VWAP further and further, the sell VWAP orders start to slow down, and the buy VWAP orders start getting more aggressive, pushing that price back up towards the VWAP price. And of course, you could also get a breakout on any type of news or big orders, but typically that benchmark is very important and sits on a lot of traders' desks to see how far away did the price deviate from that VWAP. And you could play it both ways. For example, if you're looking for a reversion, it's at the top of the line, and you want to play some kind of call spread towards the end of the day, like a credit bear spread or credit put spread if it's below that price. So many different strategies that you could form around that VWAP price. Another thing you might want to look at is the volume and how the volume progressed throughout the day. And if you look at the sweep orders, these are intermarket sweep orders volume, which are very aggressive orders that want immediate execution and will go and sweep the top of the book of all the major lit exchanges. So you want to kind of pay attention over here. And also the dark pool volume, because a lot of the institutions, their orders will sit in a dark pool and trade against either other institutions or retail flow, and they don't want to reveal their hand, so they'll sit in a dark pool, and then you could kind of tell how much volume at every point is trading in a dark pool. Another thing I was just going to show you really quickly is how these look as you go to different symbols. Like for example, Amazon, you see how it bounces around that range. Let's take a look at Facebook, and then we could see how Facebook traded within its band. Let's take a look at Google. So you see like Google broke out of that expected range, but then must have, those VWAP orders kicked in, must have pushed it back within its projected range. Let's take a look at Microsoft, Netflix, just to get an idea how the price fluctuates around the VWAP and how much it can deviate from it. So hopefully this video is helpful, and see you guys next time. Bye.